Hello and welcome and a very good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi. With me is my co-anchor Nupur. And this is a show where we are going to be taking you through all of your live viewer queries and get them answered by experts in terms of your stocks, your portfolios, and so much more to cover. Before we do that, giving you a lowdown of the market. And speaking of low, that's exactly where the market is, because right now we're at the day's lowest point on the Nifty. We've slipped right now. We're in the red, nominally nonetheless, but 24,250 is a mark that we're just struggling to hold on to right now. Sensex 2 absolutely flat. Nifty Bank in the red, more pressure over there. 0.4% lower for the Nifty Bank, and you've got the India Wix that has seen a 2.5% spike up. From the broader end of the market, the story is a little different because we're seeing a tinge of green over there. 0.2% higher on the Nifty mid cap, 0.3 for the Nifty small cap. So at least the broader end is holding on to some resilience. Sectorally, it's largely a mixed bag, because while you've got Nifty Metal, that's the top sectoral gainer on the back of the mining news that we were just talking about. 1.25% uptick on Nifty Metal, followed by 0.7 higher on the IT index. Realty, media, energy, auto doing well. Pharma and oil and gas are absolutely flat. What's slightly under pressure today is the Nifty PSU banking basket, about a percent cut over there, as well as the defense index. And then you've got a 0.5% cut on Nifty FMCG and bank, with Nifty Finance also seeing cuts of about 0.2%. While this is what the sectoral move looks like, just want to see what the advanced decline breadth is looking like for the Nifty 500. We're actually exactly even, Steven, because you've got 260 stocks in the green and 240 in the red, so split exactly in the middle for the advanced decline ratio on the Nifty 500. You've got the biggest cuts coming in on Bank of Baroda, Aegis Logistics, Dixon Tech, Five Star Finance. All of these are under pressure. And on the flip side, we've got very good moves coming in on some rice stocks. LT Foods is up 12%. Vishal Mega Mart on the back of that management reappointment is up 9%. 6% higher for Urban Company on the back of an MK initiation. EID Perry, Muthoot Finance, Reddington on the back of the mobile phone manufacturing scheme also doing well. But another stock in focus today is Hexaware Tech, after announcing their stance of involving AI in client spending on their AI Day. This has garnered the confidence of select brokerages, and Avi is joining us with the highlights of their AI Day. Avi, over to you.
So Hexaware is buzzing in trade and is seeing some strong buying inflows on back of its AI Day. So let's have a look at what the company said in its AI Day. The company says that the 50% of the revenue is AI infused and expects 20 to 25% of pricing deflation over the next 4 years because of AI. But the strategy is to offset it with new AI-led services rather than cost cutting alone. And the token economics is also driving their pricing. They have 3 new flagship offerings, which is the zero tech debt, zero license, and zero vulnerability, with a combined TAM of $25 to $26 billion. The zero license has already 4 deals completed with focus verticals like BFSI, healthcare, and professional services. They are also rebuilding their sales team with the help of AI, with specialized AI sales team, AI architects having a win rate of 30% in qualified deals. They are now also increasingly participating in $100 million plus deal sizes. They are prioritizing growth over near-term profitability, with plans to exit calendar year 2026 with a 10% growth rate on a YY basis. However, the key monitorable remains their execution and demand visibility, as the deflation offset thesis is just not proven as of now, and it remains to be seen whether the AI-led services which they will be offering to offset the deflation in pricing proves to be the case for replacing the revenue in the going term.
All right, Avi, thank you very much for joining us. Let's in fact welcome Gaurang as well as Jigar joining us on the show today. Good morning, both of you. Thank you very much for being with us. And Gaurang, before we go into taking those questions, what is your sense of what we're seeing in the markets today?
Hi, Nupur. Thank you so much for having me on your show. Good morning to you, to Snehi, and to all the viewers of ET Now, and of course to Jigar as well. A standard disclosure, all recommendations that I'll be sharing with you this morning on your show, Nupur, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Jurjit, or myself, who do not have any kind of personal investments, no financial interest, no conflict of interest, but we give similar advice to our clients. They might have their investment interest. So the broad range, Nupur, it is rather unfortunate that we have given off the gains that the market opened up in the morning. But 24,300 happens to be a level wherein in the past as well, we've seen top-heavy feeling, profit booking getting a little bit of more aggressive at higher level, and the market's giving off all the gains. So what we've advised this morning for this week, a broad range, what we feel is 24,200 to 24,000 on the lower side, 24,300 to 24,500 are the higher levels that we can possibly watch out for. In terms of events, Nupur, there are not much triggers other than, of course, the 5.5, 6 months long geopolitical situation and the news flows and announcements coming from there. Stock specific moves would be seen. But I assume, and I hope I'm right on that, that we should possibly hold out 24,200 today. If we are able to do that, then in the coming days, we might again see levels of 24,300 and beyond. But it's going to be choppy and volatile.
So pretty choppy is what you're expecting. Let's start with some queries that we're getting at this point in time. And let's go across. Take one up from Srikanth from Hyderabad. The stock that he's talking about is Birlasoft. Quantity is 200 shares. Entry price is 2022. Can I hold or exit? Please advise. That's the question. So Jigar, how are the technicals looking?
Very good morning, everyone. See, in terms of BSoft, currently, definitely the weekly structure is bearish, but the stock is trying to get reversal on higher time frame. So as of now, the structure, I'm expecting a retest of 295, but overall the major support lies around 270. So my advice would be to add at level of 295 if BSoft retest again that level and hold for at least 6 to 8 months. And overall, the upside is seen till 420, 430 levels, and stop loss would be placed below 270.
Those are the levels to watch out for on Birlasoft. Just taking a breather on the queries, let's talk about a stock that's seeing very good gains. Hexaware continues to stay afloat after their ambitious AI targets. Aviv was just talking about that. In fact, let's go across to Jude in conversation with Mr. R. Srikrishna, the CEO of Hexaware.
This is the output of what they create.
All right, absolutely. It's very encouraging that you say that because we live in a time when there's so much uncertainty with the job scenario, but the fact that you have a very visible young demographic here working with AI, I think makes for some solace to how we see the situation moving forward. But let's talk numbers, Mr. Srikrishna. I think reports have suggested that $3 billion in revenue is what you're targeting by 2029. Break that down for us. What gives you the confidence to achieve it, and how do you plan to go about doing that?
See, it's always good for any business to put an aspiration number, which we did some time ago.
Right.
Saying we want to get $3 billion. That includes our organic growth, and includes acquisitions. But the most important levers for accelerating growth for us, there were four, but AI became the fifth. The four were one, legacy modernization, which we're now calling zero tech debt, which is actually a part of AI. The second is we said we want to do better on private equity channel than we were before. Third, we were absent in the tech business. Now, all of our peers have big business in tech. Last October, we hired a very talented leader called Iravi to lead that business. We're already making solid progress.
Right.
And the fourth was for us to do better in what we think is a great market, notwithstanding the current disturbances, which is Middle East. And the fifth now, of course, is AI and all the new TAMs we've identified.
And speaking of AI itself, you said that more than 50% of your AI revenue is, or if your revenue is already AI infused. Could you break that number down for us? What exactly it means? And more importantly, how much of this is genuinely new revenue that you are actually accounting for yourself?
See, our first mission that we set on ourselves, for ourselves in the AI, is that AI should positively impact every single client, the work we do for them every single day. So this 50% is a measure of that progress.
Right.
What it means is that more than 50% of the work we do right now has AI, and it positively impacts customers, either in reducing cost or improving service, or often both.
And even as we speak, there's a $300 billion market that's left for the capturing, and you've already sounded off intentions to take a big part of that for yourself. Realistically, Mr. Srikrishna, how much of that market can you capture for yourself, and what do those dynamics look like at this time and place?
See, the way we define the TAM which you're talking about, if you go by market estimates, the TAMs for each of the lanes are actually much higher. Let me take two examples. Zero tech debt. 220 billion lines of COBOL code in production. There are estimates there that just that TAM is greater than $500 billion.
Right.
I don't think it's actionable. We think about 30 to 40 billion of that is actionable.
Okay.
SaaS market is 900 billion. It's not actionable. Many SaaS companies will survive and thrive, but there are many pockets that we think can be addressed. So we've done a smaller best estimate of what we think is addressable within each of the spaces. Now, for us to get to high growth, we need a fraction of this time to work for us.
Okay, so when you say fraction, what is that number likely to be like?
Why, even if 1% of the time works for us, that's great growth.
All right, that is indeed great growth, simply because the potential is so much, and there is, of course, a whole lot that SaaS is already doing right now that you can probably go about achieving. But there's been a big headline in the last couple of days that's put you in the focus, and that is the fact that you have said that SaaS could well be on its way out, and that it's something that AI could effectively replace. I want to give you the opportunity to maybe delve a little deeper into that and tell me what you mean. I mean, surely there's been talk about SaaS dying for the longest time now. I will give you that. I've covered multiple stories as well, which delves into great detail of how AI could make that happen. But what are you looking at essentially? AI effectively replacing the subscription-led model? Is that becoming obsolete? Why is SaaS dying?
See, if you look at why SaaS grew in the first place, there were two premises. The first, SaaS company said, I can bring best practices encoded into my platform and bring standardization. But the truth is, most large enterprises don't like standardization. They feel it's being forced on them. The second, which is true, is that it's too expensive to build software and too time-consuming to custom build software to replace the SaaS. The second part is no longer true. The first, people never liked in the first place. So I think that's the fundamental premise. However, if you look at it, there are many types of SaaS that I think will have a moat that we can't cross.
Right.
If they have core data about the enterprise, if they're running, processes that impact, let's say, reporting, processes that impact compliance, that's not our target. But it's a $900 billion market, close to $1 trillion. There are many pockets. We've identified 4 or 5 archetypes that we think are good. Archetype 1, easy to replace software, workflow stuff. Archetype 2, where people are paying for double licenses. There's a Salesforce license and there is a Viva license on top, as an example. Archetype 3, the SaaS companies decided they're going to sunset that product.
Right.
Now, for a client, what are the choice? I go and find another SaaS, or now there's a new choice. You can custom build it. So that's a third archetype. So there are a few archetypes that we feel pretty good are going to be rich targets for us, and even just sunset products. Basic research will throw up there are 150 companies that have said they're not going to support sunset products. The fourth, by the way, is customers are giving their data and renting intelligence. They're given 10 years worth of transaction data and they got PDF reports. They don't even access to their own data. So I think there are good archetypes for us to
Absolutely,
address.
and that's fertile ground really for you to go about, making that replacement happen. But even as we speak, you've completed 4 zero license deals. I think Zero Tech Debt has about 40 clients at this time in place. When do you see these offerings meaningfully add to revenue right here?
So Zero Tech Debt, I'm not sure where you got the number 40 from, but it's more than the 4. Zero license, we only started in Jan. Zero Tech Debt, the earlier avatar was legacy modernization, which we started last Jan.
Okay.
So that has more revenues right now, and it will have more meaningful revenues in the near term. In Zero Tech Debt, we actually said in the last quarter, earlier in the year, we said we got our first double-digit $1 million deal. Last quarter, we said we got our second double-digit $1 million deal on legacy modernization. And I think we'll have more double-digit $1 million deals on Zero Tech Debt before this year is out. So that'll be, first off the bat, it being more meaningful. I think Zero License, a lot of the deals right now, clients love the concept. First, they don't believe it, but once we show them, they like the concept. Then we pick up one software or one small pool and say, let's prove it.
All right, so that was the CEO of Hexaware speaking about the AI build-outs. We slip into a very short break here on Buy Now, Sell Now, but we will be right back and we'll be taking up all your queries, so do keep them coming.
Welcome back to Buy Now, Sell Now, and we're going to be keeping it going with all your queries. So let's take the next query, and Gaurang, you try and answer this query. This is coming in from our viewer Prabha, who's talking about BEL, and she says that she holds 40 shares of BEL at an entry price of 405 rupees per share. Wanted to know the target price and duration to hold the share. Now, BEL trades at 414 right now. Her entry price of the stock was 405. What would your view be on BEL?
Kindly allow me 30 seconds more to give an answer to this.
Sure.
Look, so first of all, if we are positive on the sector, that's a disclosure. We do have a positive coverage on Bharat Electronics Limited, that is BEL. Our target price is somewhere close to about 500 plus from a long-term point of view. And I've always maintained one stance saying that if you eventually decide to invest in defense after doing your homework and keeping in mind your risk appetite, please have 3 to 5 years kind of time horizon, because defense companies need a longer period to execute the order book, Sneha. And this is because of the complex engineering and high technology that is involved. So you first of all have to make a prototype, get that prototype approved, get all the certification, get the final approval for a mass scale production, and then the production starts. This takes long time. It's not like BEL would get an order this morning and maybe in another week's time or 10 days they can execute the order. No, it takes a longer time and a higher capital and an equal number of manpower. And this is respect to with all the other strong fundamental stocks which are in the defense sector. So please stay invested, have a 3 to 5 year time horizon in case if you get a dip somewhere between 380 to 400, because that's where BEL's normally goes to those levels and goes to about 435, 440 in a short to medium term time frame. But long term, continue to hold on, add on dips between 400 and 380 and look for a target of 500 plus.
All right, let's now go across to Anand, who's joining us on the phone line. Hi, Anand, how are you doing today?
Yeah, good morning. Good morning. I'm fine.
All right, so please do go ahead with your question.
Yes, so I accumulated Wellspun Living 100 numbers at an average price of 164. So my question was whether should I book partial profit now? It's a long-term holding for me, 3 to 5 years, because it has done a slight run-up. Or should I continue to hold? Or is it okay to add some more quantity also?
All right, so let's go across to Jigar for this one. So Jigar, how is the chart looking to you? The stock up nearly 1% today.
In Wellspun Living currently, definitely we have seen a very good rally right from 130 till 190. But overall, as of now, I would advise him to, book some partial profit, at least 20 to 25% at current levels from 190 till 195, and wait for a pullback till 170 where he can add fresh and wait for at least 5 to 6 months.
That's the take coming in on Wellspun Living. Hope that answers your question. Let's refocus and take the next query coming in from our WhatsApp viewer. Written to us on WhatsApp, Neeraj Verma. Stock name is Nestle, holds 30 stocks of Nestle at an entry price of 1,465. Asking for advice on what to do next. Gaurang?
Strong recommendations, Sneha, from a long-term point of view as a disclosure to continue your investments. Look, the problem with FMCG sector, Sneha, primarily was because of the scare in the month of June because of deficit El Nino impact on the monsoon. Then the monsoon doing a catch-up, but then again there was a little bit of flutter in terms of Q1 earnings, not for Nestle but for other peer comparison companies. The product profile, the brand loyalty and brand power. These are some of the extraordinary qualities for Nestle's product. It's a well-established company for a pretty long period of time. There was a little bit of hurdle with Maggi, again a power brand product of Nestle, but that seems to be in the rearview mirror now. It's in the past. Long term, continue to hold on to it, and if you get a dip somewhere close to about 1,400 or thereabouts, you can make fresh investments as well and add in case if you have long-term investment idea and if you want to add to the stock.
All right, continuing with questions that we are getting, Sandeep Anand from Punjab is writing in. The stock in question is Barmer Lorry, and he has about 100 shares of that. The entry price is 177 rupees. Now, it's a very broad-based question, not really telling us whether this is a short-term buy or a long-term buy. But Jigar, what do the technicals on this one show you?
See, in Balmer, currently, that price action is below 200-week average, which is considered as a weakness in the price. But overall, there has been a very good progress in RSI, because RSI on weekly currently is sustaining above 40-45 level, which is a very good zone, and we are expecting a base creation around 170-165 zone. So as of now, I would advise him to hold, and overall the short-term target would be somewhere around 190. If we are getting weekly close above 190, then definitely we can see 210, 220 levels as the target.
Okay, 210 to 220 on the upside on Balmer Lorry. Let's shift focus. Gaurang, this query for you coming from our viewer, Mr. Rahul Kumar Singh. The stock in focus is Ashok Leyland, holds 614 shares of this stock at an entry price of 154. 172, 173 is where that stock is, and in the last 1 month it's already given a 14% upside. The question is slightly medium to long term. What will the target for 2030 be? 3 years, 4 years hence, what would the number be? Any idea?
Well, so for that kind of a time horizon, I can give you an approximate target, because we need to factor in. We need to factor in a lot of quarterly earnings. So assuming that they would continue to do well or even scale the bar upwards in terms of month-on-month sales numbers, and along with that, the earnings delivery that they reported, especially for the first quarter gone by for this financial year. First of all, let me give a standard disclosure. We are positive. We have a buy call on Ashok Leyland. And one more disclosure, Snehi, this morning itself, we have given this particular company as an investment idea in our YouTube channel, Geojit Spotlight. So that's again a second disclosure that we have recommended this. My view, Snehi, is that the demand for, and this Ashok Leyland, by the way, Snehi, happens to be a pure commercial vehicle play, right from three-wheeler, that is ultra light, light, medium, and heavy. They have a 100% subsidiary, which also has its presence in EVs, commercial EVs. Export markets is supposed to be the great opportunity for auto sector overall in India, and the free trade agreements that India has signed with various countries will also have a tailwind support for export numbers to grow going forward from here on. Price hikes have taken place, which has happened after a very long time. That means that pricing power is coming back because of higher standard of safety and higher standard of other accessories that go into making a vehicle safer. Please hold on to it from a long-term point of view. Approximate target against Snehi, because it's a very long shot, possibly in excess of 200 plus, where the stock had been before the correction came in from those 200 plus levels to 150. But a caveat disclosure, in case if the earnings are better than what our estimates, these targets would again get revised upwards. So continue to hold on, and add-on dips would be the strategy.
All right, another question that we are taking up right now is from Raghavan in Chennai. The stock in focus is Havells. He's holding a quantity of 75. The entry price is 1,178 rupees. He's been holding the stock for about 3 years and wants to know, should he hold or sell it? So he's sitting at a bit of profit, Jigar, but is this the time for him to encash that?
Definitely. In terms of Havells, currently it has made extended top somewhere near 1300, and there is a bearish divergence over there on daily structure. And even currently the price is below the previous swing low. So as of now, definitely you should book profit and wait for a dip till 1200, 1200 to 1220. And overall, the structure is looking nice on weekly, but overall short term we are expecting a pullback of 50 to 60 points.
Okay, that's the view coming in on Havells. On that note, viewers, time to slip into a very short break. We'll keep it going with your queries on the other side with both our experts, so keep writing to us and we'll be right back.
Welcome back, and thank you very much for staying with us on ET Now. You are watching Buy Now, Sell Now. And a query that we are picking up next is coming in from Amit. He's writing to us from Mumbai. The stock in question, HCL Tech. He's got a quantity of 150 shares and the entry price is 1,365. Now, his question appears to be pretty short-termish. Says, Since HCL Tech fundamentals are good, yet the stock has corrected in 2 to 3 sessions, is it a good buy at the current price? Also need the target for short term, about 3 months or so. So, Jigar, would you like to weigh in on that one? Currently, of course, it's trading a little below what he entered at.
First of all, in HCL Tech, we definitely saw a very good bounce back right from 1080 till approximately 1300. So again, there is a double top along with divergence on daily chart, and even weekly RSI is struggling near the levels of around between 45 and 55. So as of now, we have a view that we might see a pullback because we already saw 250, 300 points massive rally in HCL Tech. So as of now, he should hold and he should have some patience because as of now, we are expecting a pullback till 1250, 1240 at that particular level. So my advice would be he can even add more at that particular level because that would be the 50% retracement right of the previous up move, and overall the view would be somewhere around 5 to 6 months, and we are expecting a target of 1500.
Okay, target of 1500 on the upside on HCL Tech is the call coming in. Shifting focus to the next query coming in from our viewer Dikshita, who wants a fundamental and technical view on Hexaware technology. Gaurang, your view on the stock? In fact, we were just, my colleague Jude was just interacting with the management of Hexaware. It's their AI day that's going on right now. The stock is up 4.5% as we speak. 555 is where it is at. What's the outlook here?
So, this AI word itself was a scary one a couple of months back. If you recollect how the Indian companies got beaten down because of the scare. And let me say one thing again, 15 to 30 seconds more, Sneh, if you will. Look, AI is a sector, IT is a sector which will go through a lot of innovation, changes, technology upgrades, and introduction of newer tools and platforms. And this speed of these launches is going to increase as we go into the future. So you have to be prepared to take the volatility as and when these newses of new platform tools get launched or new technology gets launched. We as a brokerage house remain extremely positive on the IT. Hexaware, we used to have cover, Sneh. Currently, we don't have a coverage, but we are positive on all the three aspects of IT: small cap, mid cap, and large cap. Now, if I have to give two names from each, starting from the base of the pyramid in small cap, we were positive on Science Limited and KPIT Tech. In mid cap, we are positive on Coforge and Persistent Systems. In large cap IT, two names that I can possibly immediately recollect is TCS and HCL Tech. So IT will do well, but it will take a longish time horizon because of the technological changes and upgradation.
Okay, picking up another question from Cochin right now, Thomas George writing to us. And the stock in question is Deepak Nitrate. He's holding 100 stocks of that. Entry price is 1680. Should I buy, hold, or sell at the current market value? And what is the future of the stock? Will it bounce back? So, Jigar, what are the technicals looking like on this one?
I would advise him to hold because there has been a very good rally right from March month till now. But overall, again, there is a consolidation exactly above 50-day exponential average, and overall, the momentum oscillators are looking good. So as of now, he should keep a trail SL of 1700, and below that, if counter closes, then he should exit from the counter. But overall, the outlook and the technicals are looking good, and we are expecting at least 1840 as a target.
Okay, 1840 on the upside for Deepak Nitrite. Let's move on to the next query coming in from Mr. Sivraj, who's viewing us from Chennai. Stock name is Methan Alloys. Gaurang, not sure if you covered this one. Do you cover Methan Alloys?
I'm sorry, Sneh, I'll give it a pass.
Sure. Jigar, any coverage on Methan Alloys? If you do, I'll ask you the exact question.
Definitely, I'm just now having a look at the chart. You can definitely go on with the question.
So the quantity that our viewer has is 45 at an entry price of 1100 rupees per share. Time horizon for 2 years. Should they continue holding? What would your guidance be?
Currently, this particular counter is in consolidation mode around 955 and approximately 1000 soon. So as of now, we should keep a SL of below 900 on daily closing basis. And overall, we are expecting a bounce back till 1100, 1150.
All right, so we're expecting a bounce back on that one. Now, the next question is coming in from Naveen, writing in from Thanjavur. The stock in question is Control Print. He's holding 97 shares of that. The entry price is 404, and average price, time horizon is 10 years plus. Now, should I accumulate now, or is it better to hold now and add gradually? So, I'm not sure, Gaurang, you cover this one, do you?
But I'm so sorry, I don't cover this one. I will pass.
All right. So, Jigar, what would you advise? The time horizon is quite long. He's wanting to hold it for 10 years.
See, overall in Control Print, currently we are witnessing a breakout in today's particular session, and before that we saw a very brief consolidation. So the view would be short term, at least for 1 and 2 months. See, currently definitely there is a breakout, and based on momentum indicators, we are expecting upside till 640, 645. So yes, definitely that would be the target, and overall the stop loss should be kept below 570 on daily closing basis.
Okay, that's on that one. Let's shift focus on the next query. Gaurang is coming your way from our viewer Rachel from Delhi. Writes to us saying the stock in focus is Solar Industries, holds 2 shares of Solar Industries. Now it's at 19,698 rupees a share, and her entry price was 10,000 rupees. Of course, she's made a significant profit from her entry price, but she's asking at what price should I add further? Clearly not looking to sell, happy with the move, but what would be a good price to add more over here?
A couple of things, Nehi. First of all, the entry level at 10,000 rupees. Second is the situation in terms of deep in the money profit. Third is we remain extremely positive about the sector. Unfortunately, we still don't have coverage on solar industries, so I won't be able to give you a buy, sell, and hold. I think Jigar would be in a better position to recommend a level in case if she wants to average.
Your view on Solar Industries, 19,700 is where it's at, and our viewer has bought it at 10,000 rupees. Not looking to sell, asking what price would be a good one to add more. What's your view?
View on adding as of now. The reason is seen on weekly chart. We saw, I think, couple of weeks back, we saw very good breakout, but weekly RSI is showing extreme negative divergence at this level. So as of now, you should at least book 50 to 60% and wait for a pullback. See, negative divergence on weekly as well as daily can result into 3 to 4 months correction. So as of now, definitely I would advise to book at least 50 to 60% profit and avoid going fresh longs.
All right, so the advice is that you should book profits on this one. Well, we slip into a very short break. When we come back, we will be taking more questions that are coming in from our viewers, but do also continue to call us. Stay with us.
Buy now, sell now, and time now to keep your queries going. Next query coming in from Mr. Sunny Sangral of Mohali. Stock name is Bharat Rasayan. Jigar, we'll come to you. Our viewer holds 120 shares of Bharat Rasayan at an entry price of 23.50. Asking what's the 6-year target going to be? Very specific question and slightly longer term in nature. Your views here?
Same Bharat Rasayan, again, the chart is bearish on monthly as well as weekly, currently near the support of 1250, 1275 approximate zone. So as of now, the view would be hold view because see, there is a double bottom structure on monthly as well as on weekly, along with some positive divergence developing. So as of now, you should wait above 1400. That there would be a very good rally till 1600, 1700. So as of now, my target would be around 1600 followed by 1650.
All right, so the next question that we're picking out revolves around Jio Finance. Ashutosh writing in from Ghaziabad. He holds a quantity of 50 stocks. Entry price is 242 rupees. Shall I hold this stock or sell? Not really talking about, you know, what the horizon that he's looking at. So, Gaurang, do you have coverage on this, and would you like to give us a largish fundamental view on it? Please do unmute.
I beg your pardon, Nupur. I'm so sorry about that. I hope you can hear me loud and clear.
Oh, yes, we can.
So on Jio Finance, we do have a positive coverage from a long-term point of view, and we are maintaining a positive stance. A lot has happened in terms of the new business vertical rollout, and along with that, the tie-ups that they have made. The only issue is that whenever it goes to somewhere close to about 270 or 300 odd levels, there is a top heavy feeling and a profit booking comes in, which brings it down to about 220, 230, stays there for a long time. But at these levels of 220 and 230 Nupur, there are a lot of large ticket delivery conversions that have taken place. So if you're a long-term investor, stay invested. It comes from a very strong pedigree. And along with that, it's got a lot of strong triggers in terms of the business verticals that have been rolled out. So stay invested. 270 plus is the level from a long-term point of view, Nupur. In case if the earnings deliver better than our estimates, we will revise this target upwards.
Okay, that's on Geo Financial. Next query coming in from our viewer, Mr. Vinod Tajan, writing to us from Bengaluru. And the stock in focus is Grow. Let's talk about this one. Jigar, quantity 4,000, entry price at 150 rupees per share. Stock currently at 197 and asking for a time horizon for 2 years, asking if he should add more at current levels. What would your view on Grow be?
Seen Grow again, I think is in profit. So definitely, as of now, there is no need to add more because there is a steep resistance of 200 and 201. So if this particular counter Grow is closing above this level, that is 201, then definitely you should add more and keep a target of 220, 225, and SL would be 190 on daily closing basis.
All right, let's pick up a question from Andhra Pradesh now. Babu Rao writing to us wants to know about India Energy Exchange. The quantity is 1,100 shares. Entry price is 155. Should I hold or average? I'm not sure if Gaurang has coverage on this one. Do you, Gaurang?
We don't have coverage, but let me give a word of advice, if you will, Nupur.
Yes.
This has been a terrible underperformer over the last maybe about year and a half. Maybe Jigar can help me with this as well. There are no signs of recovery coming through, specifically with respect to the government policies as far as this sector is concerned. I think what investors should do is, other than looking at only profits, they should also tied down their losses in terms of downward reaction of a particular investment. Protecting your capital is extremely important in stock market, Nupur. If you let your capital erode by 25, 30, 40% or more, then recovery of that capital itself becomes a big question mark. Forget about making profit on your investments. So be very, very cautious and careful about such investments.
All right, Jigar, any advice on this one for our viewer?
Again, I would, add that on weekly structure, it is extremely negative. There are signs of multiple bottoms near 118, 120 mark. But again, the major monthly supports comes around 115. So as of now, there is no sign of reversal. So he should try to exit at upper levels of around 125, 130. If not, then he can keep a stop loss of 115.
Okay, that's the levels to watch out for on IEX, stop loss of 115 to be kept in mind. But on that note, Gaurang as well as Jigar, thank you so much for your time today to patiently listen to our viewer queries and answer them. Thank you once again for joining us. But with that, we're completely timed out on this edition of Buy Now, Sell Now. Thank you so much for watching. Keep watching ET Now because Markets at Noon is up next.